Hi, I'm the Tax Geek, and I'm here to give you another oversimplified rundown of a complicated tax topic. Today, we get to decide who is a dependent and who isn't. Dependents come in two types: qualified child and qualified relative. Both confer different benefits to the taxpayer, which we'll get into in a moment. When it comes to claiming dependents, there are 4 ground rules. First, people who are dependents themselves cannot claim dependents of their own. A dependent generally cannot file a joint return with a spouse. A dependent must be a citizen or permanent resident of the United States, a U.S. national, or a resident of Canada or Mexico. And a dependent must have a Social Security number, an individual tax identification number, or an adoption tax identification number. Let's look at the qualified child rules first. A qualified child must meet 4 tests: relationship, age, residency, and support. To meet the relationship test, a qualified child must be your child, stepchild, or foster child, your siblings that are younger than you or your spouse are, and any of their descendants. Here is a handy chart of who meets the relationship test to be a qualified child. To meet the age test, a qualified child must be under age 19, under age 24 and at least a half-time student, or any age if permanently and totally disabled. To meet the residency test, a qualified child must live with you for at least half the year. Exceptions exist for temporary absences, divorced parents, and children born or died during the year. Finally, to meet the support test, the child must not provide over 50% of his or her own support. It does not matter who actually supports the child. The important thing is that the child does not support him or herself. The child can make money, but if the money is not spent on his or her support, then it doesn't count as support. For example, your daughter works as a model and as a result makes a large amount of money, but you put that income into a trust fund for her to use when she becomes an adult. In this case, your daughter meets the support test because none of her income is being used for her support. Please also note that under the qualified child rules, there is no income test. A dependent that is a qualified child can make as much money as they want, although they may have tax issues of their own to deal with. A dependent who is a qualified child can make you eligible for the following: the Earned Income Credit, the Child Tax Credit and Additional Child Tax Credit if under age 17, and the Child and Dependent Care Credit if under age 14. If a person doesn't meet the requirements to be a qualified child, he or she may meet the requirements to be a qualified relative. The tests to be a qualified relative are: the person must not be a qualified child of you or any other taxpayer, relationship and residency, support, and income. First of all, to be considered a qualified relative, a potential dependent cannot be your qualified child or the qualified child of any other taxpayer. To meet the relationship test, the relationships include your children, your siblings, and their descendants, plus your parents, their siblings, and their ancestors, your parents-in-law, and siblings-in-law. Here is a chart showing all the valid relationships for a qualified relative. None of the people listed in this chart need to live with you to be a qualified relative. By the way, relationships established upon marriage do not dissolve when the marriage ends. Your in-laws remain your in-laws, and your stepchildren your stepchildren. If someone doesn't meet the relationship test, you can still claim a qualified relative as long as the person lived with you for the entire year and meets all the other requirements. This can include your girlfriend or boyfriend, your cousin, or your ne'er-do-well unemployed college chum who crashed on your couch for the entire year. For a potential qualified relative to meet the support test, you must provide over 50% of your dependent support. If multiple people provide support, for example siblings supporting a parent, these people can file Form 2120 to designate one person to claim the dependent. Finally, a potential qualified relative must meet an income test. He or she cannot have over $4,300 in gross taxable income. This figure is for 2020 and increases every year for inflation. So let's see how this works. Your mother receives $12,500 in Social Security benefits and a small pension of $2,500. Is she your dependent under the qualified relative tests? First, she's not yours or anyone else's qualified child. Second, she is your parent, so she meets the relationship test. Next, as long as you provide over $15,000 in support to her, she meets the support test. And finally, she only has gross taxable income of $2,500, since in this case her Social Security benefits would not be taxable. Therefore, using all these tests, your mother would qualify to be your dependent as a qualified relative. Dependents who meet the qualified relative tests qualify you for a $500 per person non-refundable family credit and head of household filing status in certain cases. What happens when more than one person attempts to claim the same dependent? Well, that's a story for another time. And of course, there are many additional details when it comes to claiming a dependent. This video condenses over 10 pages of IRS information into a little over 1,000 words. You'll find additional information in the resources listed in the description below. If you found this video informative, please give it a thumbs up and subscribe to see more content like this. If you have any questions, comments, or suggestions for future videos, please leave them below. Thank you for watching, and for more oversimplifications, click on the videos above.